Okay, we'll go ahead and get started. Good morning and welcome to our webinar, Total Time Accounting, Exploring Compliance Through Timekeeping Methods. We ask that you add any questions or webinar ideas in the chat, and we will address them at the conclusion of the presentation. At this time, we'll let our presenters introduce themselves.
Okay, thanks, Nicole. So my name is Patrick Curtis. I'm going to be the host today. Perhaps introducing some slides, asking some questions, and Scott's going to do most of the talking. Just want to say that up front. So I've been with the firm for 24 years. I have 17 years of experience as an auditor. I spent the early part of my career, say the first 12, as a staff auditor / senior supervisor manager. I've been a partner since about year 12. About 5 years in, I went ahead and left the audit department. I've been running our outsourced accounting department since, which has been a absolute delight. I enjoy that very much. Of course, I started out my career working strictly on government contractors, but I've had sort of a progression into some other organizations, mostly on the nonprofit side. Today, I still serve a number of government contractors as their outsourced accountant, at least my team does. I'm still involved in consulting with government contract issues. Scott? You are muted, sir. Why don't you go ahead and unmute yourself?
Sorry about that, folks. Hi, my name's Scott Flaherty. I have been with Rubino for almost 31 years and have worked the entire time working with government contractors on the audit and consulting side. From a consulting perspective, do some due diligence and work with indirect cost rate development, incur cost submissions, but also focus on internal controls and compliance. And that's kind of what we're here to talk about today. And the nice thing that, I work with organizations that are as small as $1 million. Some are as large as $500 million in annual revenue. And what's really nice about what I get to do is I get to go to different clients. I get to see different things that they're doing and how they're approaching different compliance areas. And I'm able to sort of share that with some of the other clients that I work with. I think what's nice about having Patrick here as well is he brings sort of the almost internal, acting as an internal accountant for some of his organizations. So he can bring that perspective, and I can bring some of the outside perspective as well. So again, thanks everybody for joining us today, and we look forward to sort of talking about some timekeeping policies and procedures.
Okay, so we're going to start out and just start with some of the basics. And Scott's going to tell you about the elements of a DCA compliant accounting system.
Sure. Thanks, Patrick. And so there are many elements to a compliant accounting system. And I guess maybe the first thing that I'd like to start off by saying is that, a compliant accounting system, it's not the software. I mean, the software plays a critical part in your system, but it's really the underlying policies and procedures that you have developed and are implementing. And so just kind of a high level, a compliant accounting system, it's governed by the Federal Acquisition Regulations, the cost accounting standards, along with some guidance from DCAA. And we've just got some bullets here that are pretty critical to your system, whether it's the segregation of costs between direct and indirect, the allowability or unallowability of costs, and making sure that you're accounting for those costs by award, so your final cost objective. And sort of how does timekeeping fit in here? Well, that hits all of those elements. And we're going to discuss sort of how to sort of protect yourself and things that you can do in terms of developing and designing a system that will hopefully hit on each of those areas.
Okay, folks. Well, looks like we're going to move very quickly into our very first poll, and just take a second if you don't mind. And we're going to do 2 of these, so we won't be too intrusive. But if you could go ahead and answer, that'd be great. I'll give you about 15 or 20 seconds, and we'll move on to our next slide. All right, Nicole, why don't we go ahead and jump to the next slide and close up the poll. Thank you. All right, Scott. So let's just jump right into timekeeping, and maybe you can sort of define the topic that we're talking about today.
Sure. And so what is total time accounting? And so as we've got here written, the definition of total time accounting is a method used to record and bill for each hour worked by employees, whether paid or unpaid, and also refers to allocating the associated cost of labor to contracts. Any compensated personal absences during the normal work week, like holidays, vacation, sick leave, are also included in the reporting. And so why is this critical? Well, in terms of cost to your organization, payroll, labor, is usually one of, if not the single largest line item that you have. And it is literally the one expense where everybody in the organization impacts by virtue of completing a timesheet. So every day, every employee is making a cost allocation decision. And so we need to make sure that they are aware of what the policies are, what the implications are, have we educated them properly, and how are we going to account for time to make sure that we are compliant. So it's really important to get this right. We need to be clear on the policies and the potential impacts to the company and to individuals, and regularly communicate this importance to the client. So, in order to have a compliant system, you need to have some processes in place. And so what does that look like? It includes timesheets, it includes personnel files, payroll registers, labor distribution reports. All of that goes into sort of a total time system. And we'll talk a little bit more about some of the options that you have about recording time to be compliant.
We're actually going to touch a little bit on the frequency of when you have to do that time as well. All right, go ahead, sir.
So why is timekeeping important? It's your contractor is responsible for accounting for costs appropriately, maintaining records, including supporting documentation adequate to demonstrate that costs claimed to have been incurred, allocable, and comply with the cost principles. So again, it's making sure it is no different than any other cost that you have. Those costs need to be supported. And how do you support that? Again, it's with the personnel files, it's with timesheets, it's with payroll registers, labor distribution reports. So you've got to have a system that integrates all of that. And when I say system, again, we're not talking about software. Software certainly can play a key role in that. But you need to have the policies in place. So whether you have a robust system, a mature system like a Deltek or a Uninet, or you have something that's a little bit more manual like a QuickBooks, you can design processes that sort of track the hours and time and how it flows through your system. So you've got to be able to demonstrate, if upon audit, how those costs are being captured, accumulated, and allocated.
So in addition, well, we talked a little bit about the DCA and sort of their general approach to accounting systems and whether or not they're adequate. This is all documented very well in Form SF-1408. So if you Google GSA SF-1408, you'll see the pre-award survey of contractor accounting systems. You can also, sort of go into DCA.mil and do the same thing and find their specific pre-award survey for contractor accounting systems. But the important things is that document, it's easily findable. It'll tell you all the elements you need to have of your accounting system. You need to be able to segregate costs by direct and indirect. You need to be able to segregate unallowable costs from those costs that are charged as allowable to contracts. You need to be able to identify your labor cost by intermediate and final cost objective. And then Scott's mentioned it, but you need to have that labor distribution system. That thing that takes those hours, monetizes those hours, and then allocates the cost off to your contracts within the general ledger. And the general ledger is a requirement of a adequate timekeeping system. There are probably some folks out there, hopefully not on this webinar, that are still using, dare say, a very, very manual accounting system, and perhaps are not entering all their transactions into the general ledger on a regular basis. These are things you have to do. So please familiarize yourself with that. It is a critical part of kind of what we're going to talk about today. So Scott, why don't you just sort of jump in, and I know we talked about this a little bit, but what exactly is required for an adequate timekeeping system?
Sure. And really here's the emphasis here is we talked about the other reports. Patrick mentioned the labor distribution report and sort of the role that plays, but really here focusing on a timesheet to start with. Employees need to maintain a timesheet and they should be recording it on a daily basis. Ideally, an employee is going to record their time contemporaneously throughout the day and not doing it either in advance or in arrears. Certainly, having a policy where you have your timesheet completed by the end of the day will give you the best opportunity to have the most accurate time reporting. Certainly, there are instances where you may fill out your timesheet in advance if you've got leave scheduled, there's a holiday. But generally speaking, timesheets should be recorded on a daily basis by each employee under the methods and policies that you have set up for how time is to be recorded. Again, it should not be done in arrears. The farther you go, the harder it is to remember what you did each of those days. Once that timesheet has been completed for a pay period, the employee and their supervisor should sign off on the time, acknowledging that it is correct to the best of their knowledge. The supervisor should be somebody that has a working knowledge of what that individual is doing, so they can remember and have notes if they were not around for a particular day or not. So what happens occasionally is the supervisor will remember that, perhaps somebody was off that day and there was time charged and it wasn't properly recorded, or there was a new project number for an option year. And so it needs to be charged to a different task than what was originally there. So there's ultimately going to be changes to timesheets, and that's perfectly acceptable. The important component here is that if you have a change, that you're documenting the reason for the change. And if you're in a situation where you've got an electronic timekeeping system, there are ways to do that within the system where you make a note and make a change and document the reason for the change, and then both the employee and supervisor could sign off on the reason for that change. Old school used to be with manual timesheets. You would simply scratch through it, initial it, and change the time and note the reason why. But the systems today are pretty robust and can handle documenting those reasons for the changes. And so once the timesheet has been completed, it's accepted, it's approved, it's been put into the system, it's going to create a labor distribution report. And that's, as Patrick said, monetizing the labor dollars, allocating it to the cost objectives, and reconciles that back to the payroll report, so payroll register, and ensuring that the costs are being allocated to both the final and intermediate cost objectives.
Okay, so we're going to hit on, I guess there's three accepted ways to account for all of your time, hence the title Total Time Accounting. And we're going to go through all three of these, and then we're actually going to jump into some examples afterwards, which sort of show how the cost is allocated. So Scott, why don't you go ahead and take it away, sir?
Sure. So we start off, we've got the first example here, but I'll preface it by saying there's multiple ways, and we're going to walk through the different ways that you can be compliant for accounting for your time. When you hear total time, the thought is we're recording all hours worked, and that's really what this first method is going to be. So other acceptable practices, this first method is going to involve the least amount of judgment. It's probably going to be the easiest one for your employees to follow. And it basically is, if you work 10 hours in a day, you record 10 hours a day. And if you work 6 hours a day, you record 6. There'd been a mindset in the past from from contractors that, I don't get paid overtime, so I only need to record 8 hours a day. And while they may not be paid overtime, that is correct. By only recording 8 hours a day, again, they're making cost decisions on how things are going to be recorded and reported to the government as in terms of labor costs. So if they're only if they've worked on both a project and some indirect efforts, like bid and proposal, and they've made a decision to only record the 8 hours of direct labor on that project, they're making a cost decision that's impacting the company. So there are cost implications, and that's why it's important to have a lot of education and communication with your employees about and be clear about your policies and procedures. So with that said, the first method is total hours. And again, that's what people think of with total time accounting, is it captures every hour, including the uncompensated overtime. And then it allocates those costs. It essentially compresses that and allocates those hours across the projects, the objectives that were charged, and takes the total cost that was paid for that employee for that pay period and allocates it to those proportionally.
So I'm just going to interrupt for a quick second.
Sure.
Maybe you can go back one slide, Nicole. So one of my clients, actually more than one, I've seen this on multiple occasions. And generally these are going to be small contractor startups. And they kind of look at things as, hey, I'm going to go ahead and pay myself for the work I'm doing for the government. But there's no funding source for the other work I'm doing. So I'm not going to charge my time for that, right? I'm not going to pay myself for my admin work. I'm just going to pay myself for the time I do in government work. And it's not that, so that's kind of a mindset also. It's not that we're not recording our, sorry, folks, there's a fire alarm in the background. We're going to stay here if that's all right with you. Completely interrupted my train of thought, but the point is this is something you see in a pretty common thing with small contractors. Next, please.
So the second method is sort of a spin on the I only record 40 hours a week. You can do that, and that's fine. What that is, you're essentially asking the employees to do is to take, if they've worked more than 8 hours a day, and do the compression of hours into an 8-hour day themselves. Again, we're going to get into some examples and we'll see it's not that easy to do. It's prone to manipulation or error by the employees. They may not go through the steps to allocate the hours properly. They may just round and just do what's easiest, or they may make that decision to only charge the direct and not the indirect. But it is a way. We don't see this. I would say maybe I've seen it once in my career of a company that does this. So it's not very often, but it is something that is acceptable as the proper timekeeping allocation methodology.
And this one's my favorite. It's very complicated, but it is my favorite. Go ahead, Scott.
It's a little bit more complicated than the others. And it's actually something that I've seen used a few times. I've seen it used successfully with one client and not so successfully with another client. And the theory behind it is that if you were to assume that there's an hourly rate that an employee has for every hour that they worked, depending on each pay period, and this is assuming you pay semi-monthly, so the pay periods may have 80, 88, 96 hours. Depending on how many of the base hours in a pay period are, an employee's hourly rate is going to change, even if they don't work any overtime. And so the thought is, well, we want every project for every hour that employee works on it should be charged the same. I mean, the level of effort is the same. Why wouldn't we be charging the same dollars to it? And so obviously, if you were to have different base periods, that hourly rate, if you were charging, get into an example, but if the rate that you were charging at 80 hours in a base period is the same as the one that says 96 hours, well, there's going to be a difference because you're not paying them necessarily that amount. They're getting paid evenly throughout the year. So in order to sort of adjust for that, what you're doing is you're putting the full hourly rate to the projects, to the cost objectives, and then the difference between what the employees actually paid versus what is charged through the labor distribution report results in a credit, or it could be a debit, to an overhead account. And it's usually called like a payroll variance account. And so for the company that I've worked with that has done this very successfully, it works out great. It helps them with forecasting. It helps the project managers manage their budget. It provides an element of predictability and stability in terms of knowing how the costs are going to go. So oftentimes when projects are bid, they're bid with a certain number of hours at a certain rate. Well, maybe one person, it's not a significant difference, but if you've got 100 folks on there, that variability can provide some challenges as you're managing the costs on that project. So what this does is it eliminates that and sort of allows you to sort of manage things sort of how contracts were bid. And so it's worked out great for one client. And the biggest issue that they've had is that the government doesn't see this too often. And with the turnover that the government auditors have had, it requires them to re-educate the auditors on an annual basis. And there's never been an issue. It works out mathematically. It's a very simplistic way, even though it is something that not many people have seen, but the math works out. It's the same as if they were using total time accounting. I did have one client that did not use it as successfully. They were under the mindset that, well, if an employee is here January 1st and they stay till December 31st, we charge the same hour, it all works out in the wash. That's great, it's true. But people do start in the middle of the year, people do leave in the middle of the year. And the way they decided to handle it was to include it on the balance sheet as a payroll variance account. And then they would just simply reconcile it at the end of the year. Very difficult to reconcile, and ultimately ends up just going back into as a credit to overhead. System wasn't designed properly. It created some headaches for them. It didn't allow them to sort of have a good sense of where things were internally, financially for them, because of the way they handled it. So really the system setup was critical here, and they had not done that properly. So, this is a different method. It is one that has been used, and we can walk through some real specific examples with numbers to sort of show everybody in a bit here.
Can we, excuse me, can we agree that sort of using this method of accounting for your time would not be a good idea if you're not using a sophisticated government contractor, cost accounting system?
It's certainly easier if you've got some software that will help you with these calculations. It's not impossible to do it, but it does create some additional steps that need to be done outside the accounting system, manual steps. And with anything, the more manual steps that you have to do, the more likely there's a chance for an error. So again, I would, if you're dealing on a smaller system, I would not suggest doing this. It's something that a more established system would more readily be able to handle.
Okay. All right, folks. So here's our second poll. What webinar topics would interest you in the future? We could do things like cost accounting standards, allowable versus allowable cost, accounting systems or government contractors. We could really get into some of those large systems then. How to set up and maintain a project budget, and maybe even pretty simple but important, understanding indirect versus direct costs. We'll go ahead and give you a couple of 15, 20 seconds to answer that, and then we'll move on to the rest of the webinar. Like I said, this is the last interruption with polling questions, but next we're going to jump in and we're going to actually go through some examples. So I'm going to introduce the data set, or sort of the circumstances that we've been talking about. Why don't you go ahead and go to the next slide, Cole? So I'm going to introduce the data set, and then Scott's going to go through sort of all the different scenarios. So in this example, we have an employee who works 96 hours in a pay period with 88 base hours, meaning 8 hours of overtime. On project one, they charged 20 hours. On project one, they worked 20 hours. On project two, they worked 60 hours. And on project three, they worked 16 hours. Salary is $96,000 per year, or $4,000 per pay period. And their effective hourly rate is $46.15 based on a $96,000 salary and 22,080 annual work hours. By the way, folks, I know you were worried, the fire alarm has gone off and the fire marshal has not arrested Scott and I, so we are okay. Thank you. Go ahead. Next slide, please.
So what we've got here is we've got the three methods that we've just talked about, and trying to put the numbers that Patrick just went over, show you how things are going to work out. And so, we'll start with method one, which is the total hours, which is when an employee records everything on their timesheet. So where we have the column that says actual hours, that's going to be what's on their timesheet. We say project 1, project 2, project 3, but really those are just cost objectives. They don't have to be direct projects. It could be indirect. It could be G&A labor. It can be bid and proposal and so forth. So the important thing is just know those are 3 different cost objectives. And so using that methodology, we would take the 4,000 hours that the employee was paid, and they would take a proportion of the hours worked for each project. So in example 1 with project 1, the 20 out of 96, that ratio of $4,000 equates to $833 of cost. And so as the system, however you have it designed, whether it's the software doing it or you doing this manually, project 1 would be on the labor distribution report would have $833, and so on and so forth for projects 2 and 3. So again, you've got the employee recording their actual hours. The system and the process, however you have it designed, would then allocate what they were paid directly in proportion to the hours worked to agree to the total amount that they were paid for the pay period. Now, method 2, this is the one where we said we're going to just say we have a 40-hour work week, and we're going to ask the employees to only record 40, but to keep track of their time and sort of compress it, if you will, to only reflect the 40 hours. So we've got the first column, which shows the actual hours. Now, if an employee was to do this properly, the adjusted hours are what would be in the middle column. So again, we're asking employees to do math. Timesheets are not something that they really are looking forward to do probably in the first place. And now we've added this extra step for them that could be consistent, it could create some errors. And so if they were to handle it properly, you'll see that ultimately the allocated costs, what would get reflected on the labor distribution report for all 3 projects, would be identical to method 1. But now what likely would happen was if somebody worked 96 hours, they're not going to say they worked 18.33 hours. They might say they worked 18 hours. And that's assuming that they even tried to do the math on this. And what you're going to have is you're going to have, I won't say improper, but it's not going to be as accurate time reporting than if you had just everybody report their total hours. So again, this is why this method isn't really used. You get to the exact same result as if you used method 1, but it does require the employees to do an extra step that they may lead to some additional errors and inaccuracies in the reporting. Now,
So I'm sorry,
yes, sir.
If you were doing this offline in a non, sort of automated timekeeping system, you still would have to do calculation for method 1, and that's just dividing your pay by the total number of hours worked, right?
Yes.
Okay, so you're adjusting the rate in method 1, but it's one calculation. You use the same amount for each line item. Method 2, you're doing multiple calculations and you're adjusting the hours, correct?
That's exactly it. Yep.
Okay. Sorry to interrupt.
No, thanks for asking. Method 3 is the standard hourly rate. So again, on the data set that Patrick walked through, the employee was paid $46.15 an hour. So in this method, every hour that the employee works, well, they're going to record all hours. And then every hour that they worked is going to get charged $46.15. So you'll see that the standard cost in the far right column differs for each project than what were shown in the first 2 methods. And when you add up those costs, you'll see that there was $4,430 of labor charges, but that we know that employee was only paid $4,000. So now we're costing $430 more than we actually have paid these employees. So how does this work? Well, this is where this overhead credit to this payroll variance comes into play. And so we would say, well, we paid them $4,000, the cost was $4,430. So this $430 is credit to the overhead. And it doesn't sound like it might work, but it does. So what you've got is now this credit is going to reduce your overhead rate. You have an inflated direct labor on these 3 projects, assuming they're projects, direct projects. So you're going to apply a lower overhead rate to a higher direct labor. And since overhead typically follows direct labor, including it in the overhead pool is the appropriate place to include it. And if you run through the numbers, you can use it with your own system, and you'll see that it does work, and it gets you to the exact same place for what you will be charging the government. It will look different because you'll have more direct labor than what you would in these others. But at the end of the day, what ultimately gets charged back to the government would be identical, whether using any of these 3 methodologies.
Okay, can we actually just go back one slide? I'm going to ask Scott to maybe opine a little bit on something. So earlier in my career, when I was still doing audits, I ran into, excuse me for that, folks. I ran into a situation where a client, and actually this was a nonprofit client, but they were working on a large number of government grants, or government, maybe some private, but majority were federal awards. And unfortunately, they were sort of facing a decline in their revenue base, in their contract base, or their grant base, whatever you want to call it. And the executive director had instructed employees to charge 8 hours a day to their direct objectives and to not record time worked for bid and proposal work, which was to be done after the full workday was over. So, I mean, he really sort of made it pretty explicit, unfortunately, and said, I need you to go out, I need you to do your full 8 hours work, then I need you to go in and put in some new proposals for new grants in the evenings, and don't charge any time for that. Kind of ran into this by accident, just talking to an employee. It's not something we were necessarily looking for at the time, but the employee said something which triggered a question. And then we just started peeling back the little layers of the onion until we got to the truth of the matter. Can you kind of tell us, Scott, how that would impact things? And just using some of this data, if you had to throw in some additional uncompensated hours, what would happen?
Sure. Yeah, I think, if you start with sort of the most basic example. So if there's just one project that the organization, the company has, and, they've got an indirect rate and they're able to recover their indirect rate, really by not recording that indirect time, it wouldn't matter, right? Because everything that you would have in your G&A pool would then be collected by this one contract. But that's just not a realistic example. I mean, there's going to be multiple contracts and projects, different contract types, cost reimbursable, fixed price, time and materials. And so when you make a decision like that, when an employee is directed to make a decision and report their time in a certain way, what you have is you've got some projects that are going to be overcharged for the labor. So in this case, if people were not recording their bid and proposal time, the projects that they were only charging their time to were getting a greater share of the costs, more so than what the employees should have had allocated to that project. And how that works is with the other projects is now they are not getting their fair share of the G&A costs. And so those projects are maybe looking a little bit more profitable. So if you've got, one cost reimbursable project, but a lot of other time and materials, you might, by doing this, what you're doing is you're actually trying to maximize the profit on that cost reimbursable work. And those other fixed price works, that's fixed price. And so, the more we keep our costs down there, the more profitable that work will be. So at the end of the day, by not recording those hours that were sort of an indirect cost, ultimately it is a misreporting of time and labor costs and overcharging to the federal government.
And I will tell you that in this instance, that client was forced to, while they chose to report, this incident to the granting agencies because they felt that, they had definitely underreported costs and they had to go and disclose. And that's not one of those situations you want to be involved in, trust me. All right, why don't we jump ahead to the next slide. All right, so should we talk about sort of the benefits and the drawbacks of compliant versus non-compliant timekeeping systems? So, obviously some of the benefits are obvious. You're going to have more accurate financial data. And so what does that mean? Well, it means, from a project management perspective, you may be able to review budgets and have better information there. It may help you with forward pricing. And as you're looking forward to sort of make decisions on what indirect rates would be or what utilization would be, having that information
as you're bidding on future work would be incredibly helpful. Obviously, one of the key benefits is that there'll be hopefully fewer issues with government audits. So as incurred cost audits are being done, having a well-documented and proper compliance timekeeping system will alleviate any issues. There still may be compensation issues, maybe due to how much folks are being paid, but in terms of how time is being captured and allocated, hopefully there's fewer issues there. If you without having a compliance system, what you've got is in the example that Patrick just shared is you've got potential disallowance of labor costs. Worst case scenario, you may have a termination of a contract for having an improper timekeeping system. And you could improperly price contracts. If you don't have that accurate financial reporting, I've seen it where there's assumptions that are made in terms of how much things are going to cost and their costing because they don't have good, accurate data. Then now they misprice something when they're proposing on it, and it results in a loss. So that is a very real implication of not having proper time. But I saved the top bullet point for last, and that is sort of the failure of DCAA floor checks. Now, I'm not sure how many folks have had the opportunity to go through a floor check. I've had several clients that DCAA has simply shown up, and it is one of the audits where they don't have to let you know they're coming up. They can just knock on your door and say, we're here to do a floor check. And, we've done some floor checks for clients just as a good practice, just to sort of see how folks are recording their time and their understanding of company policies and procedures. But in today's day and age, with so much of everything being electronic, auditors can simply come in and say, I just need to see these 25 individuals' timesheets. And at a click of a button, you should be able to provide those timesheets. And so if DCAA comes in and looks and they say, well, okay, we sampled 25 folks. And of these, 10 haven't recorded their time for the last few days. 2 have recorded their time for the rest of the pay period. And it wasn't for PTO. Right there, they're starting off at a point where they've got questions on your timekeeping policies. In the old days, you used to have to walk around and look at people's paper timesheets, and word got around fast that DCAA was here and people quickly got their timesheets in order. Today, that information is available to them at a moment's notice. And so they will have that ability to see how well people are complying with your policies. They will then also go talk to your employees and they will ask questions. Have you ever been asked to change where you charge your time to? Because maybe there's not funding left in a project. Have you ever worked any overtime? And if so, how do you record that? What's the increments that you record your time in? Is it an hourly, quarter hour, 1/10 of an hour? They're going to make sure your employees understand everything about the timekeeping policies and procedures that you have in place. And so it's really important for them to be aware, if they're ever put in that situation, to know what the right answers are. And when I say right answers, I mean it's a compliant answer, but it's also hopefully aligns with what your policies and procedures are. Because if and I've done them where I've gone out to clients and I've been acting as the DCAA auditor, and I've had the answers of, well, I don't record any overtime because I don't get paid. I don't know what to do if I work overtime. Yes, I've been asked to change my time because this project was running out of funding. So I've heard those answers. And if the government is in there and they're getting the same responses, that could be problematic for you. And so there are things, and we can talk about that on the next slide, of what you can do to put yourself in the best position. Because again, going through these floor checks, they're not fun, but if you've trained and educated your employees properly, they should not be much of an issue.
Sorry, everybody, I muted myself because our fire alarm has come back on. I don't smell smoke yet, so I think we're safe. But if we run, you'll understand what's going on. So let's talk about how you're going to get started with just kind of creating a compliant set of policies. And by the way, we're gonna send everybody a I guess we'll call it a primer, a little sort of one pager, kind of gives you some bullet points on how you can get started with creating your own timekeeping policies. The first thing is you're going to have to develop a comprehensive timekeeping policy, including any additional considerations for remote staff. And that's fine. You know, writing all that down is great. Putting it in the employee handbook is great. But if you don't touch it again, and if it sits there for the next 10 years and your employees develop their own bad habits, then it's kind of a worthless document. So you need to regularly communicate those policies and procedures to staff. Should definitely be part of the onboarding of new employees. And I would say at least once a year, perhaps twice, you want to dust off that little handbook, you know, schedule an all staff meeting, and in addition to talking about the, you know, sort of culture things and how the business is doing and other administrative matters, you should talk about timekeeping in those policies. Like Scott said, it is probably one of the single largest elements of cost that you have. And it is so therefore it's the single largest risk you have as a government contractor. Is that fair to say, Scott?
Absolutely.
Okay. And then, you know, I've never had a client subject to a floor check from DCA, and frankly, most of my clients are civilian agencies. They don't do it. But what you did mention, Scott, is that you can look at this electronically, right? So you can go into the back end of your timekeeping system. And I would suggest that maybe director of HR, director of contracts, you go in, you pull open the timekeeping program, and you see who has recorded their time, you know, for the week or for the day, or who's actually filled it out for the rest of the week already, knowing that they're not on vacation. And then you craft some feedback, and let's keep it very high level to start with. Here's some things I noticed. Perhaps you do it next month, and you get a little bit more specific. I saw this twice. And maybe at that point you call up individual employees and you say, look, I saw you did this not only that time, but this time. This is very important, and here's why. And then the third time, you know, maybe we're doing some HR interventions, whatever the case may be, but some form of performance improvement plan to make sure that your timekeeping is accurate and timely.
And I'll just say, you know, just kind of a few thoughts on some of these bullet points here as well. So, you know, Patrick mentioned, you know, reviewing regularly your timekeeping policy, and you know, oftentimes, you know, we will look at someone's policy, and maybe it's in a handbook, maybe that handbook hasn't been updated for a few years, and certainly we're in a different world today than we were, you know, 4 or 5 years ago. So a lot more remote work folks, whether it's local working from home, whether they're international employees, whether they're just working across the states. We've had that before, but certainly it's more prevalent today. So go back and review and be granular with what you're putting in there, how frequently timesheets need to be completed, what the interval of time is. You know, if you're just simply saying, if people are just recording to the nearest hour, that may not be the most accurate way to record time. I'm not saying you need to do it to the minute, but be specific about what your expectations are in terms of what interval of time needs to be recorded. And again, like I said, make sure people know it needs to be done daily, and really just revisit that and make sure that those policies are clear and have enough information so that if somebody needed to refer back to it, they could read it and understand completely what your policies and procedures are. And again, communicate regularly. You know, Patrick mentioned this should be done during orientation, but please don't let that be the only time that people are taught about their timesheets. They've got a lot going on during their orientation, and to think they're going to remember everything that is said is not realistic. So regular communication, sharing what your policies are, reminding folks that is the importance of accurate time records. As Patrick said, do a floor check. It's all at your fingertips. You can kind of get a sense at any part. You know, usually pick a day in the middle of a pay period, see how folks are doing, and really maybe develop a training, some internal training. There could be some learning systems that you can utilize to sort of remind folks. And perhaps, one of the results of failure to complete your timesheet, and the 2 or 3 times that Patrick had said, is maybe there's additional training that those employees need. What you want to be able to do is you want to be able to present your best self to the government. If they come in and do a floor check, if there's any questions during an incurred cost audit, you can say, here's our policy, which is very detailed. Here's what we're doing to educate the employees, not just at orientation, but throughout the entire lifetime that they're here. We're doing it at regular intervals. We're sending emails. We're doing on-site trainings. We're doing virtual trainings. We've got this learning management system in place. Here are all the things that we're doing to put them in the best position to record their time accurately. So again, this is not a one-off. We got their 30 minutes of training when they started. This needs to be something that's a regular part of what you do. And it starts at the top. You hear tone at the top. It's got to be something that's really taken seriously by management and owners. And it trickles down to everybody. And it needs to be an emphasis given, as we said, the total dollars that are at play here.
And I'm sorry, this is kind of our very close to the end here, if not the last slide, but I just want to just chime in one more time. If during an audit, somebody does find an issue, having those policies and procedures and being able to document what you've done throughout the year, that could be the difference between a systemic finding and a one-off. So from that standpoint, just an ounce of prevention, or in this case, maybe several cups of prevention, is worth its weight in gold. So what do you say we go to the next slide, which I think is the end? It is. So at this point, we'll see if there's any questions. Nicole, how are we doing there?
We don't have any questions in the chat at this time.
Okay. Well, it was a very exciting topic. We understand. Compliance is at times a little dry, but it is a necessary. Scott, do you have any closing words?
Thanks everybody for joining us. Again, if you've got any questions, feel free to reach out to us after the fact. You've got our emails. We'll be sending, as Patrick said, something out on Monday. And again, just final thoughts is again, over communicate if possible. Do everything you can to put your employees in the best position to succeed in recording their time, because it is a significant cost for each organization.
And I'm going to chime in with my thoughts on behalf of small government contractors. You guys have got to understand your cost structure, and it's very difficult when you're small because you haven't really fully built out the company. But if you're not recording all that time, when you get your first cost reimbursable contract, you're gonna make a mistake. You've got to be diligent and sort of start doing all the things that you need to do to get that first contract so that you can appropriately bid it. And you won't end up with overrunning a ceiling, whatever the case may be. So start now, be diligent, and it'll serve you well. All right, everybody. Lacking any last minute questions, we are going to go ahead and sign off now.